Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 25th of October 2024. First chart is the US dollar index futures. You can see they've stretched higher again this week, which has put a lot of the associated markets under some pressure, which you'll see as we move along. Price has been moving quite logically. If you draw all the lines in, you can see where the market has traded within these lines pretty consistently. You've got the highs of the range up here. The market has pushed up to this level this week. It's gone through the easier section through here. It's moved up on a slight increase in volume, but only about average volume. So this is genuine trading. No hidden surprises in there. The market may find a bit more difficulty if it continues pushing higher and up into this level through here, which suggests the market may then move into some form of consolidation like this for at least a period in response before there's any attempt to push higher. E-mini S&P, this is S&P 500 index futures. The market has been steadily climbing more recently, and it just came back a bit this week to consolidate. It was a bit of an elongated consolidation. The spread increased towards the downside, but the market closed back at mid-bar on below average volume. And you'll note the last 3 weeks in particular, volumes have been quite low. In fact, over the last 5 weeks have been below average, and that's these 5 bars through here. So there's no real intent in the market at the moment. It's floated higher. It's not really encountering a great deal of supply, and it's just sitting up there, perhaps just waiting to see what's going to happen in the US economy. At this point, there's no great danger being shown by the market. It's just sitting up there without a great deal of demand in the market, but not a great deal of supply either. US Treasury 10-year note futures have generally traded very consistently for a long period of time. There was a reluctance to move lower down here. You see the market did trade very logically for a long period of time. And even when it came back here, it came back to a logical level. And it appears the market has moved into this level in here this week. It's attempting to find support there. Volume continued to be a little below average. It was increased this week as spread increased towards the downside, but it was still below the average overall. I expect this market may attempt to consolidate around this level, similar to the US dollar index futures, but in reverse, and perhaps try to consolidate down here like this, sideways, at least early next week. Copper price futures. Copper price futures had been in consolidation mode after accelerating higher here. They've been consolidating like this within this bar's range, which is exactly what you'd like to see. This week saw the market testing for supply, spread narrowed. It traded inside the range of the previous bar on reduced or below average volume. And this market looks well placed now to make an attempt to push higher when trading conditions are favourable. The next highs of the range come up here, so you're probably going to see a recovery back here prior to any serious attempt to challenge this level. The market could trade sideways just in the meantime while we wait for markets just to sort themselves out a little. Gold price futures. Gold price futures have traded consistently higher for some time now. Here's the most important lines in the market. You can see the spread narrowed considerably this week on an increase in volume about average. So you would suggest that some supply at least was being drawn out this week, and that may see the market just come back a little and test for supply at least early next week, or perhaps even move into consolidation mode like this for most of the week. But there was definitely some supply drawn out this week, and the market's attempting to absorb that supply, and it may continue to do so at least early next week with a test for supply come absorption type bar. But the market did see spread narrow, volume increased. The positive close up near the highs of the bar suggests that the buyers still remain in control, but there was supply drawn out, and generally a market will come back and absorb that supply if it still wants to continue higher sustainably. Silver price futures. Silver price futures got a little bit over enthusiastic this week. Here was the highs of the range. We had the breakout last week, and this week the market's just attempted to go higher. It has drawn out supply. It's closed well off the week's highs on an increase in volume and above average volume. Supply has been drawn out, pretty much no doubt. This was a little bit of over-enthusiasm in the market following the breakout last week, and this market will almost certainly need to test for supply next week at the very least. And if supply continues to be drawn out, especially in this market, which is a little bit more volatile than the gold market, you may even see a little down bar like this, especially early in the week next week, as the market comes back and attempts to deal with this supply. Light crude price futures recovered a bit of the lost ground last week. It did appear the market pulled back a little more deeply last week, considering that volume was actually well below average, and the market has recovered some of that ground this week on even lower volume, although spread did narrow in response. It's come back to this sort of level. This market's traded a little more inconsistently than you'd like more recently. Here was the level above that the market moved into, drew out supply, pulled back in response, and now the market's pretty much moved back up to the lows of that range. I think the market's going to sit in this little area here for a period now, in this area through here, sort of similar to what happened over here. I expect the market will continue to trade in this range, at least for a period of time. Euro US dollar currency futures been stretching lower here, mostly in response to the strength in the US dollar. You can see the market pushed higher here over 2 weeks. Some absorption was required, then stretched up to establish a new high. Those highs weren't able to be sustained and price broke down on this bar. This market is showing some reluctance to move lower here, but the closes each time are just a little below the previous bar's lows. And each time that suggests the market is vulnerable to a breakdown. This market isn't closing at logical levels either. Here's other logical levels to the downside. The market's sort of overshooting these levels each time, which is a sign of weakness for the market. If we look at the British pound currency futures, you can see spreads are much narrower. There's a real reluctance to move lower here. The close is right at the previous bar's lows pretty much each time. And this market is still trading within this up bar's range. There's a reluctance to move lower here compared to the euro, which is stretched way below. Here's that bar here, stretched way below that bar's range. Although this market is showing some reluctance with overlapping bars here, the British pound is showing much more strength. and is certainly reluctant to move lower here. It is moving lower. It's being forced to by the strength in the US dollar. But this market is showing much more underlying strength compared to the euro at this point in time. Japanese yen currency futures really broke down this week. Volume was increased, but it remained well below the average. Here's your lows here. Here was this week's breakdown. You've got some support down here, and again down here. That's where the markets ended up this week, right in the middle of this zone. The fact that volume was below the average suggests that demand was very low in the market this week, and the sellers that were present forced price to really stretch lower in order to seek out enough demand to satisfy the sellers. Sometimes when this happens, you'll see a market respond positively. After the sellers have all left, the market will rebound to some extent as a supply vacuum can form within the range of this week's down bar. So we'll see if that happens this week and you get some sort of recovery this week in response. Aussie dollar currency futures also stretched lower in response to the strength of the US dollar this week. Here was the lows of the range, and you can see the markets push well below that. The next low's down here. So the market's within this new range. Volume was quite low this week. It was reduced over the previous week and well below the average. So it doesn't seem like there was a great deal of intent in the market to move lower. Perhaps similar to the yen, the sellers were dominating the market. There was not enough demand to satisfy the sellers, and that forced price to really stretch lower in response to seek out enough buyers to satisfy the sellers. That may also see this market just respond modestly and recover some of the lost ground this week in response. Bitcoin futures were testing for supply this week, and supply was drawn out. You can see that volume was actually increased above average and increased this week. But the market did close positively, so there's been a strong attempt to absorb the supply in the market. Price is sitting right at the previous all-time highs here. That's what this line is. This is the previous all-time highs, and this is the highs of the previous range. The market pushed higher last week above the highs of this bar. It's pushed up. It's effectively attempting to break out here, and this week has seen the market absorbing supply. It was a test for supply, which has moved lower and then recovered, attempting to absorb the supply that was drawn out in response to last week's breakout or attempt to break out. Now, when supply is present, generally markets don't move sustainably higher. So you may find the market does produce a secondary test for supply with a narrower spread and less volume is drawn out early in the week next week. And if the market does find that supply has eased, which would suggest that this week's volume did absorb the majority of the supply in the market, then this market would be free to push higher. But I would expect a modest pullback either over the weekend or early next week to test for supply and just establish that the selling pressure in the market has reduced, and that would allow the market then to move higher in response, and that would be higher, sustainably higher. We just move back to the US dollar index futures quickly. The market has been steadily pushing higher. It's moved up into this range just here this week. I would expect an increase in supply up here if the market does continue higher. That's the highs of that range. You may find that it's actually a slight zone rather than a range. So a push above 106 would really be significant. I think the market is more likely to attempt to consolidate here around the 104 level, just above and just below. And then we'll just see how much supply is drawn out at this level. If supply is found to be low, you may find the market attempts to move higher. If supply continues to be drawn out, then the market may come back into this intermediate level, which we established was probably in here, like this. So that's where the market will go if supply continues to be drawn out. Okay, thanks for your time. The strength in the US dollar has really caused a few troubles to some of the associated markets with supply being drawn out. It was interesting to see how many are reluctant to move lower, and they're the ones that are really showing strength in the market. Okay, thanks for your time. See you next week. See ya.